Hey, what's going on, everyone? So yesterday my phone was just blowing up. People calling me, texting me, hitting me up on Twitter and Instagram, asking about the oil crash. Why was it happening? What does it mean? What can we expect moving forward? So I thought I'd make a video just kind of outlining my thoughts a little bit. Not that my thoughts are worth anything in the grand scheme of macroeconomics, but I have spent the past couple of years researching and studying the markets in oil and gas, and happy to share my thoughts on everything that's going on. So, first and foremost, I've been saying that I expected 2020 to be the worst year in oil and gas, and this was before coronavirus. This is before a pricing war. So even without these, extremely catastrophic events and variables, I expected this to happen. Now, why did I expect it to happen? Because almost every single shale E&P has a distressed balance sheet. They're not producing free cash flow. They're burdened with debt. Just levered up to their eyes with debt. And the capital structure is just broken in oil and gas. So all of these E&Ps have been essentially artificially inflated for the past several years, and now they're just getting hammered. Whether it's in the public equities market, you can look at any public company. They've all your mid caps, small caps, losing 90% of their value over the last year and a half. It's just been wild. Look at Whiting Petroleum here this year. There's been a couple days where they just got absolutely slaughtered. And then in the private markets, the private equity model, you have a liquidity lockup, and there's no one to liquidate assets to. So that's creating problems. So whether it's private company, public company, the common denominator is that no one's generating any money. It's that simple. So, let's kind of take it back. Let's start at the genesis of the shale revolution. In 2010, it's really kind of this 10-year window of when everything started. A lot of companies were going out and getting commitments from private equity companies. These management teams, you got two different types of management teams. You got an ops base that's usually a geologist or an engineer, and then he builds a team, or you got a finance guy who's a former investment banker, private equity guy, and he goes and builds a technical team, and they go find an asset. They go raise, $100 to $500 million from private equity. They'd go drill on the asset, prove the reserves on the asset, and then they would flip it for a premium to another buyer. And these other buyers are typically other private equity funds. And so a lot of people made a killing doing this over the years. And I always likened it to a game of musical chairs. And at some point, the music stops and someone's left without a chair. And that's what you started seeing happening within the last year and a half. People really started saying that, oh man, the drill and flip model isn't there anymore. There is no more liquidity. There are no more buyers for these assets. And so now companies had to start figuring out, okay, we actually have to generate a return, a profit, and operate within cash flow from our existing assets. Well, you get to this point where you realize that, hey, shale wells have extremely steep decline curves, and the production falls off of a cliff pretty quick. And even more so when you start running out of your core acreage and you're relying on infill wells to kind of prop up your production numbers. These wells have sharp declines. So I spent a lot of time talking to investment banks, private equity firms, E&Ps, and just kind of getting as much knowledge and information as I could. And it started becoming very apparent last year that 2020 was going to be the year that E&Ps were looking to cut capex. Well, how does an E&P cut capex? They're going to stack rigs. Okay, that's, reasonable first move. You start stacking rigs. Okay, so now you're cutting back on the amount of wells that you're drilling. When you cut back on the amount of wells that you drill, you aren't replacing that production that is having a steep decline off of your other wells. So now that your production's falling, you're not generating as much revenue. Now that you're not generating as much revenue, how are you going to service all of the debt that you have? You know, you have these RBLs, which is a special financing tool in oil and gas. And essentially these are revolving credit facilities. So, you know, say that you go and you have a $500 million asset, you know, you could get a $200 million RBL facility, and you can do with that money what you need to do. You know, it's supposed to be used for operational things. Anyways, almost every company has RBLs. And mezz debt stacked on that too. I mean, we can talk about the capital structure, but that's another entire video. But just know that these guys are over levered like crazy. So you stack your rigs, you're not drilling new wells, you don't have those new wells to bring on new production online to replace the old production that's steeply declining. So now you can't pay your debt, you can't pay your loans. So now the banks come calling. And the banks start trying to restructure debt. And this is what you're seeing. I mean, look at Whiting. This is why Whiting dropped 50% in one day the other day, is because they hired some advisors to start figuring out how they could restructure their debt. Now, Ray Dalio has a really good video talking about how the economic machine works. And he talks about short-term debt cycles, long-term debt cycles. You should really go watch the video. You can find it on YouTube, Ray Dalio, how the economic machine works. And so when you look at a long-term debt cycle, you know, you go through this period of deleveraging. And I started really looking at oil and gas, and I was like, oh shit, we're at the top of the peak, and we're about to enter a period of deleveraging. And so I started looking at previous recessions in oil and gas. And, you know, last one being 08, 09, and, you know, every few years before that. And I was like, what we're entering doesn't look anything like a previous oil and gas recession until you get back to the 1980s. And the 1980s was different than any other recession that we've had since then in oil and gas. And the same, like, you can look at the general economy as a whole. You know, the rule of thumb is every 5 to 7 years we go through a recession. As we start to dip down into a recession, the Fed cuts interest rates, tries to stimulate the economy, and eventually it works and the economy recovers. Well, when you enter into a period of deleveraging, like, you know, the Great Depression, the Fed will start pulling all the levers trying to cut interest rates, and all of a sudden they're bottomed out and there are no more options. And at that point, consumers aren't wanting to take on any more debt. So in this case, your E&Ps are the consumers. They don't want to take on any more debt. The banks aren't wanting to issue any more debt. And the banks are actually looking at, hey, how can we restructure this debt so that we don't lose our ass? You know, there was a auction the other day for an E&P asset. It had two liens on it. First lien was $80 million, and the second lien was $160 million. The E&P defaulted on the second lien, the $160 million, and the asset went to auction. They opened up the auction, and they opened it up at $5 million. Auctioneer says, $5 million, any bids? No bids. Room's quiet. He drops it down to $1 million, gets a bid at $1 million. $2 million, he gets a bid at $2 million. $3 million, he gets a bid at $3 million. That was the final bid. Auction closed out at $3 million. They said the bankers' faces were just glazed over. $157 million loss on that asset. And that's what you're gonna start seeing. These banks have to try to recoup whatever they can and restructure the debt, and it just becomes a bloodbath. So all of this was happening before coronavirus, before pricing war. Now you may be asking, how does coronavirus play into this at all? Well, coronavirus has absolutely killed demand for oil and gas. Think about it. Corporate travel is banned now by most companies. Most companies aren't traveling. People aren't taking vacations. People aren't even going out of their house to go to events. So the energy consumed has tanked. And so you very quickly get into this surplus of oil and gas, and the price is just naturally going to go down. Well, then, you can look up what's happened with OPEC between Russia and Saudi Arabia. Long story short, OPEC opens up the floodgates and there's a pricing war. So now, Sunday night, Monday morning, oil absolutely crashes. At one point I saw it at $28, and it's just, it's a nightmare scenario. These oil and gas companies already couldn't generate free cash flow, couldn't generate a profit at $50 oil, $2 nat gas, and then we dropped down to $30 oil and $1.80 nat gas. What are you supposed to do? Now, a comment that I see a lot, that a lot of people make is, well, oil prices can't stay like this forever. They have to come up at some point. How can these E&Ps keep operating if they're not generating a profit? Well, I don't think people have an understanding of how markets work, but to be blunt, markets don't give a fuck if American oil and gas companies exist. They don't. The way that markets work is that you have a demand curve, you have a supply curve, and your supply is going to be fulfilled by the lowest marginal cost operator. And guess what? The lowest marginal cost operator isn't America. Russia, Saudi Arabia, pretty much any country can produce hydrocarbons cheaper than American E&Ps can. So if you don't have OPEC doing their job to support pricing power, America loses, because that energy is going to be supplied by a country that can do it much cheaper than us. So this whole argument of, oil prices have to come back up, no, it's bullshit. Russia says that they can operate at $25 to $30 oil for 6 to 10 years. I don't know how much truth there is to that as far as the term of time, the length of time, but I know for sure that they can sustain that a lot longer than America can. So, you look at, if you compare this to the 80s was the lost decade. It was painful, and even people that lived through the 80s, I think that they forget about it. I've made a lot of charts comparing the two, and it was ugly. I wouldn't be surprised if we see rigs go down to 300 rig count in America in the next few months. Would not be surprised to see that at all. So how does that affect, OFS, oil and gas startups, anything directly related to oil and gas, machine shops, pipe yards, etc., etc. Then you have ripple effects into the economy. Real estate, housing prices in Houston will suffer. People like to say that Houston's diversified. It's not. It's very heavily reliant on energy. And then, just spending goes down as a whole. So it gets nasty. And you'll hear people say, this is going to be a bad couple months, but, we'll get through it. I don't believe this is a couple months thing. I believe this is a couple of years. It could very easily be 5 years. You look at, like I said, the pricing, the E&Ps were screwed before a pricing war. Now that you have a pricing war, how long does this pricing war last? Who knows? Can't tell you. But can tell you that it'll kill American oil and gas companies essentially overnight. Every shell company right now is worth $0. They're worth less than $0. They're burdened with debt. They're worth less than zero. So it's bad. And people ask me, what should I do? What's the next move? And to be honest, I don't know. I don't know what to tell people. All I know from my point of view is the only thing I can control is my work ethic and my amount of effort. I can't control macroeconomic factors, and neither can you. But On the other hand, you can also work as hard as you want, but if you're swimming upstream against the flow of the water, you're not going to get very far. So I don't know. I think it was Scott Sheffield, Pioneer's CEO, said that over the next few months, there's going to be tens of thousands of layoffs in oil and gas, and that's that's what's going to happen. You have something like 500 E&Ps now, and there should be 5. So think about how every oil and gas company has a full staff: geologists, reservoir engineers, landmen, etc. What happens when those companies don't exist anymore? Another argument that people will use is, the majors are going to come in and save the day. They're just going to acquire everyone. The majors aren't that active in shale. 2018, out of all the wells drilled, the majors accounted for 5%. 33% were drilled by the private market. 33% were drilled by the small public caps that are under a $2 billion market cap. 66% of your wells were drilled by the smallest players in the space. 5% by the majors. The majors haven't been active in shale. I just don't see how they come and save the day and scoop up all these assets. I mean, you can make the economies of scale argument, but there's really no evidence to support that. So, I don't know. I've been worried about the industry for a long time. It's one of those things that I hoped I was wrong on, but the writing was on the wall. I've been worried about my friends and family for a long time in the industry, and now that day of reckoning is here, and I hate being a pessimist, but I'm a realist, and it's going to be a hard couple of years. Now, with that said, I believe that these are the times where fortunes are made. Very many instances and cases of the best businesses in the world being built in downturns, or some of the wealthiest people in the world building their legacy in the middle of downturns. So I think that there is a lot of opportunity, and people should look for that opportunity. But just know that it is going to be rough. It's going to be rough for the industry as a whole. It's going to be rough for individuals. But the industry comes back. This is a very, very volatile commodity in oil. I mean, there's not another industry that runs in cycles as much as oil and gas. So I know it sounds like, the sky's falling, oil and gas is dead. Oil and gas isn't dead. It'll come back. It's just, what form does it come back in? How does it come back? Can shale be profitable in the long term? What happens to oil and gas prices worldwide? Lots of unknown variables that go into this. Lots of stuff that I can't explain or articulate. All I know is American oil and gas is going to go through a lot of trouble, a lot of pain. It's going to affect a lot of other industries. You're already starting to see the markets. I mean, coronavirus, the crash in oils, kind of acting as a catalyst for public markets. Looks like they're, slipping into recession. I think yesterday was the worst day in stocks since 2008. Don't quote me on that. I just saw that somewhere. So be prepared. Just know it's coming, and make wise decisions based on the information that you have.